Hello all of you. Now we'll pass journal entry of question number 3. So draw this for one page journal entries. Okay. Date, particulars, debit, credit amount. Okay. So draw this for one page 2021 April 1st. Okay. How many number of shares that we want to do buyback is of 25,000 shares. We are doing buyback at rupees 20. So first we have to purchase it. So equity share buyback account debit, equity share buyback account debit 25,000 shares of rupees 20 each. So maximum that we can do buyback is how much? We've calculated here 28,750. How much we want to do? 25,000 only. Okay. So 25,000 multiplied by 20, that's come 5 lakh. So equity share buyback account debit 5 lakhs to bank account. How much it is? 5 lakhs. Being buyback of 25,000 equity shares of rupees 10 each at the rate of rupees 20 per share. We are doing buyback at rupees 20 per share. Okay. So equity share buyback account debit to bank account. Now we have to first we have purchased it. Now we have to cancel it. When we do the cancellation, you know that share capital will be cancelled by face value, and the excess amount we are paying over face value, that we will write it down as premium on buyback. So first equity share capital account debit, equity share capital account debit, 25,000 shares, and face value of one share is rupees 10. That's come 2,50,000. Premium on buyback account debit, 25,000 shares multiplied by rupees 10 is 2,50,000 to equity share buyback account 5 lakh rupees. Equity share buyback account 5 lakh rupees. So here we have debited equity share buyback account by rupees 2,50,000, and here we have credited equity share buyback account by rupees 2,50,000. So here decrease in capital we record share capital at face value. So when we do the cancellation, it will cancel at face value only. The face value is of rupees 10, and excess amount that we have paid over face value, that is premium on buyback rupees 10. Okay. So equity share capital account debit 2,50,000, premium on buyback 2,50,000. Being cancellation of shares bought back. Now this premium on buyback, we will write it off against securities premium account. So whether we have balance in securities premium account, so how much we require? 2,50,000. So yes, we have 2,50,000 a year in securities premium account. Okay, if there is no balance in security, You can also utilize this P&L account, surplus balance, revenue reserve and all. Okay. So write down here securities premium. There is no restriction that you have to write it off against securities premium only. You can write it off against P&L account, revenue reserve. Okay. So write down here securities premium account debit. Securities premium account debit 2,50,000 to premium on buyback account. Premium on buyback account 2,50,000 being premium on buyback being premium on buyback adjusted against securities premium account, adjusted against securities premium account. Okay. Now we have cancelled this premium on buyback account. Here we have debited by rupees 2,50,000 and we have credited. So premium on buyback account get closed. The last entry, as nothing is mentioned about the issue of shares in the market, it means that it is out of profit only. So what is the face value of buyback of share? Is 2,50,000. So this much amount we have to transfer to CRR account. So how much we have in revenue reserve? We have 15 lakh. So we will utilize 2,50,000 from revenue reserve. Alternatively, you can utilize from profit and loss account 125, from revenue reserve 120. You can do that. You can utilize individually revenue reserve account because there is enough balance in revenue reserve account. So we will utilize revenue reserve account. So write down here a revenue reserve account debit, a revenue reserve account debit. How much is the face value of buyback? Is 2,50,000. So 2,50,000 revenue reserve account debit to capital redemption reserve account. Capital redemption reserve account 2,50,000 being transfer of free reserve to capital redemption reserve account to capital redemption reserve account to the face value of capital bought back as per law. Okay. So done. Only 4 entries. It is also asking question to prepare balance sheet. Now we will prepare balance sheet. So write down there balance sheet of Mrs. Complicated Limited, of Mrs. Competent, not complicated. Okay, of Mrs. Competent Limited. We are doing this. We are preparing this balance sheet after buyback. Okay, after buyback. So write down there note amount. So first equity and liabilities. Equity and liabilities. Shareholders fund. Share capital. Reserve and surplus. Share capital, reserve and surplus. So share capital, note 1, reserve and surplus, note 2. Then okay. Then second, non-current liabilities, non-current liabilities, long-term borrowing, long-term borrowings. Then here third point, current liabilities, current liabilities. Okay. In current liability, keep the space for 1, 2 line and then write down asset side. Asset. For long-term borrowing, we'll make a note, note number 3. Okay. Now asset side, non-current asset, non-current asset. In non-current asset, first property, plant and equipment, property, plant and equipment. Then intangibles, third non-current investment, non-current investment. Now here, then current asset. In current asset, keep the space for 2, 3 lines, then total. Okay. So here, whether they've given property, plant and equipment individually, note 4. So make it notes to account on PP also, note number 4. Okay. Now write down one by one. Notes to account number 1. Notes to accounts. Notes to accounts. Number 1, share capital. Notes to account number 1, share capital. Okay. So in balance sheet, if you see here in balance sheet, notes to account number 1, notes to account number 1. Okay. So 12,50,000. Go to notes to account number 12,50,000. So shares of rupees 10 each. So type 12,50,000 in calculation, 12,50,000, and when we have pass entry, we have debited equity share capital by rupees 2,50,000. So minus 2,50,000 come 10 lakh rupees. So write down here, authorized, subscribed and paid up capital. So now share capital is 1 lakh because so number of shares 1 lakh. Okay. So here 12,50,000, you have done the buyback of 2,50,000. Remaining 10 lakh is the amount. Share is of rupees 10. It means there is 1 lakh share of rupees 10. Okay. So write down 1 lakh equity shares. 1 lakh equity shares of rupees 10 each, fully paid up, of rupees 10 each, fully paid up. So write down here 10 lakh rupees. 10 lakh rupees total. So write down in balance sheet 10 lakh. 10 lakh. Okay. Second will be on reserve and surplus. Reserve and surplus. So write down this 10 lakh in balance sheet. So in balance sheet, write down here 10 lakh. Share capital 10 lakh. Okay. Now reserve and surplus one by one. So first reserve and surplus, notes to account number 2. Reserve and securities premium, we have 2,50,000, but we have utilized this 2,50,000. You can see when we have passed journal entries, we have debited 2,50,000. So complete amount of securities premium we have utilized to write off premium on buyback. So write down here notes to account number 2, reserve and surplus plus first securities premium. Securities premium, write down in inner column 2,50,000 less utilization for premium on buyback is 2,50,000. So in outer column it will come 0. It will come 0. Okay. Next, reserve and surplus item, reserve and surplus, profit and loss account balance. So 1,25,000. But when we have pass entry, there is no adjustment in P&L account. That 1,25,000 will come as it is. The second, profit and loss account. Profit and loss account. How much it is? 1,25,000. Profit and loss account. How much it is? 1,25,000. Then after this, revenue reserve is how much? 15 lakh. But we have utilized revenue reserve. Here we have utilized revenue reserve by rupees 2,50,000. So we have debited it. So we'll deduct 2,50,000 from revenue reserve. Revenue reserve we have 15 lakh. So write down here. Third, you write it down in continuation. I am writing in next page. So here, revenue reserve. Revenue reserve. How much it is? Given in balance sheet 15 lakhs. Less transfer to CRR, that is capital redemption reserve, 2,50,000. So how much balance we have now? Outer column it will come 12,50,000. 12,50,000. Okay. One more thing here, when we have pass entry, you have created CRR here. Okay. CRR 2,50,000. So write down here one more capital redemption reserve. Capital redemption reserve, which is how much? 2,50,000. Now do the total of all items of reserve and surplus, which is 1,25,000 plus 12,50,000 plus 2,50,000. Okay. So 12,50,000 plus 2,50,000 plus 1,25,000. 16,25,000. Reserve and surplus is 16,25,000. How much it is? 16,25,000. So write down this 16,25,000 in balance sheet. 16,25,000. Okay. If you see here you have debited equity share buyback account and then you have credited equity share buyback account. Here we have debited premium on buyback, then we have credited premium on buyback. All done, just we have to do the adjustment in this bank, 5 lakh. Same figure will come now because this only bank account is left. 5 lakh will be deducted from the bank balance. Other item will come as it is. Now after this, long-term borrowing, same it will come 28,75,000, right as it is. This 14% debenture and unsecured loan. So write down here third long-term borrowings, 14% debentures, 14% debentures, which is 18,75,000. Unsecured loan, which is 10 lakh. So total 28,75,000. 28,75,000. Write down in balance sheet 28,75,000. So 28,75,000. Okay, 28,75,000. Okay. Now after this, you have this now other current liabilities, which under current liabilities 16,50,000. Write down here other current liability. Other current liabilities 16,50,000. 16,50,000 other current liabilities. Okay. Now asset side, PP 46,50,000 as it is, it will come. So make a notes account on it. Notes account number 4. Property, plant and equipment, property, plant and equipment, property, plant and equipment. First item here, land and building 19,30,000. So land and building 19,30,000. Then plant and machinery 18 lakh. Plant and machinery 18 lakhs. Then furniture and fittings 9,20,000. Furniture and fittings 9,20,000. Now do the total here. 19,30,000 plus 18 lakh, 9,20,000. It is 46,50,000. Total is 46,50,000. So here don't worry about what is net carrying amount. Carrying amount means book value. Net means they have some adjustment. In past they may have charged some depreciation. It is net figure. Okay. So write down here net carrying amount, net book value. Net carrying amount. Net carrying amount 46,50,000. 46,50,000. Okay, 46,50,000. Okay, so write down this 46,50,000 in balance sheet. There is no intangible asset, no non-current investment. How much is the current investment, current asset? They have given single figure here, 30 lakhs. So write down here in inner column, other current assets, other current asset. Write down in inner column 30 lakhs. Okay. They have not bifurcated bank, inventory, debtors. They have just given one figure 30 lakhs. And this bank, when you have pass entry here, you have credited this bank and bank is a part of current asset. Now the bifurcation is not given there. How much is the inventory, how much is debtors, how much is bank. But all these are the part of current asset only. The figure is given for current asset. Just deduct this 5 lakh because bank is a part of current asset. So like minus 5 lakh. Minus 5 lakh. So it will come 25 lakhs. Okay, 25 lakh. So now do the total 46,50,000 plus 25 lakh comes 71 lakh 51,000. 71 lakh 50,000. 71 lakh 50,000. Okay. Now do the total here 71 lakh 50,000. So here 10 lakh plus 16 lakh 25,000 plus 28 lakh 75,000 plus 16 lakh 50,000. 71 lakh 50,000. Okay, 71 lakh 50,000. Done. So now question number 3 is finished. Okay, it's a lengthy question. The main thing is that which we have covered here. Entries are simple, balance sheet is simple. The main thing is that calculation of that 3 tests: resource test, shares outstanding test, and debt equity. You don't have to worry. When we will do some more question on those test calculation, you will be comfortable with it. Now, if you see in question number 4, which is very simple, here just we have to calculate which? Here just we have to calculate debt equity ratio. Okay. So whenever you solve question, first we have to read what is asked in the question. You can see here you are required to compute debt equity ratio test, the maximum number of shares that can be bought back in light of the above information when the offer price, it means the buyback price is rupees 30 per share. So we have to calculate this debt equity ratio, that third point, third test. Okay. So here Pratham Limited, a non-listed company, has the following capital structure as on 31st March 2021. Equity share capital share of rupees 10 each, fully paid 30 lakhs. Then reserve and surplus, they have general reserve 32 lakh 50,000, securities premium account 6 lakh, profit and loss account 4 lakh 30, and they have revaluation reserve 6 lakh 20. Total reserve is 49 lakh, and loan fund means debt. Loan fund means debt. Okay, remember, loan funds mean debt. Okay, what is the revaluation reserve? There is the accounting standard called accounting standard 10, property, plant and equipment, where we will cover. But remember that revaluation reserve we create when we revalue the assets. When we revalue the asset, then we create a revaluation reserve. So when we revalue the asset, we create revaluation reserve account. So timing, you just have to know, revaluation reserve is not a free reserve. Revaluation reserve is not a free reserve. So this is free reserve. This is free reserve, profit and loss account, and general reserve. And you know that whenever I say free reserve here in buyback chapter, which is including what? Securities premium account. So when we say those condition, paid up capital plus free reserve, that free reserve covers general reserve, P&L account and securities premium account. Now, so just here, third point, we have to do it once again, this third test only. Okay, now write down here. Write down here. Question number 4th. Question number 4th. Page number 10. Question number 4, page number 10. Write down there. You can give the heading there. Debt equity ratio test. Debt equity ratio test. Okay. Write down there. After buyback, debt cannot be in excess of twice of paid up capital and free reserve. Okay, what does it mean? We have already discussed about it before the break, that your debt cannot be more than the twice of the paid up capital and free reserve. Okay, so write down here first point, debt. What do you mean by debt? Here loan funds. Okay, it includes both short term and long term. It is given in question, loan fund is how much? 42 lakh. So 42 lakh is loan fund, debt is 42 lakh. Okay, so if I say this 42 lakh cannot be more than the twice of the paid up capital and free reserve. It means, suppose if it is 1, so here paid up capital and free reserve, minimum it should be how much? 50% of it. Okay, 50% of it. We have discussed here that if suppose your debt is 2, suppose if your paid up capital and free reserve is 1, so your debt cannot be more than 2. So can I say this paid up capital and free reserve minimum that should be maintained is how much? 50% of your debt. 50% of your debt. So write down here. Point number B. Minimum paid up capital and free reserves to be maintained after buyback, 50% of that debt, which is 42 lakhs, 50% of 42 lakhs. Okay, 50% of debt it is. Okay, it is 21 lakh, it will come 21 lakh. C point now. You can say, for your understanding, 50% of debt. Okay, how much it is? 50% of 42 lakhs. 50% of 42 lakhs. How much it is? 21 lakh. Point number C. Present paid up capital and free reserve. Okay, present paid up capital, free reserve. Write down here in question, equity share capital paid up is 30 lakhs. So write down equity paid up capital, which is given 30 lakhs. So write down here inner column 30 lakhs. Add free reserves. Remember, free reserve means including security premium. Write down property duties pay. I'm writing just SP. You write down securities premium. Free reserves including securities premium. So how much you have? General reserve 32 lakh 50,000. So general reserve 32 lakh 50,000. Then securities premium 6 lakh and profit and loss 4 lakh 30. So securities premium how much it is? 6 lakhs. 6 lakhs. Then revaluation reserve 6 lakh 20. Revaluation reserve is how much? 6 lakh 20,000. 6 lakh 20,000. Sorry, by mistake I have written revaluation reserve. Sorry, which is not revaluation reserve is not allowed. It is a profit and loss account. So write down there profit and loss account. Profit and loss. Okay, which is 4 lakh 30,000. Revaluation is not paid up capital plus free reserve. 32 lakh 50 plus 6 lakhs plus 4 lakh 30. So 42 lakh 80,000. So paid up capital is 30 lakhs. Free reserve is 42 lakh 80. So total your paid up capital and free reserve come 72 lakh 80,000. 72 lakh 80,000. Okay. So current paid up capital and free reserve is how much? 72 lakh 80,000. Write down here point number D. For a understanding I am writing here. How much is the current paid up capital and free reserve? Is 72 lakh 80,000. This is present existing paid up capital and free reserve. So some amount will be transferred to the from this paid up capital and free reserve to CRR, which we call it X. It will transfer to CRR. Some should be maintained. How much should be maintained? The minimum paid up capital and free reserve to be maintained is 21 lakh. So 21 lakh should be maintained, and remaining can be utilized for the purpose of buyback. We call it Y. But we don't know the value of this X and Y. So that will solve by simultaneous equation. So keep the space for 4-5 lines. Keep the space for 4-5 lines and then write down their working note. Okay, keep the space for 4-5 lines and then keep this write down working note. Number 1, write down there amount transferred to CRR and maximum equity bought back will be calculated by simultaneous equation method. Suppose amount transferred to CRR is X and maximum permitted buyback is Y. So write down here then first equation. We have 72 lakh 80,000 is existing paid up capital and free reserve. Some will be transferred to CRR, that is X, and some should be maintained. How much should be maintained? 21 lakh. Remaining Y means remaining that can be utilized for the purpose of buyback. So second here, can I say Y is the amount of buyback? If I divide it by 30, why here we have divided by 30? How much is the buyback price? We are doing buyback at rupees 30 and face value is 10. So for one buyback, we are paying just 1 minute. For one buyback, how much we are paying? 30 rupees. So this Y is amount of buyback and rupees 30 is buyback price per share. Okay, buyback price per share. So can I say if this amount of buyback and this is buyback price per share. So can I say this is y divided by 30 is the number of shares of buyback? And yes, it is total amount of buyback y divided by rupees 30, that is the buyback price per share. So it will come number of shares of buyback. Now if I multiply it rupees 10, what is 10? Which is face value. So when we transfer to CRR account, we transfer to CRR account face value. This is number of shares. This is number of shares. Okay. This is y divided by 30 is number of shares. This one minute. Y divided by 30 is number of shares. So this is number of shares and multiply by face value, the CRR will come. What is CRR x? So can I write this equation as 3x equals to y. Now we know that y equals to 3x. Put here 3x in place of y here and solve this equation. So write down here by solving the above equation we get x equals to and y equals to. X equals to, just put here 3x here. So 72 lakh, let me write down here 72 lakh 80,000 minus x is how much here now? X is okay, x minus 21 lakh, and how much is y equals to 3x. Solve this equation. So x equals to 72 lakh 80,000 minus 21 lakh divided by 4x. So 51 lakh 80,000 divided by 4. So it will come 12 lakh 95,000. So x is how much? 12 lakh 95,000. 12 lakh 95,000. Now we have find it 12 lakh 95,000. So you can put 12 lakh 95,000, y will come, or you can say x is 12 lakh 95 multiply by 3. So y will come 38 lakh 85,000. So what is this x? The amount of CRR, and what is this y? The amount that we can utilize for the purpose of buyback. Okay. Now write down here point number D now. So point number D, maximum permitted amount for buyback. Working note number 1. So we have which is y 38 lakh 85,000. So we can utilize for buyback 38 lakh 85,000. Now see here, we have 72 lakh 80,000, and to CRR will you transfer how much? 12 lakh 95 will transfer to CRR. 21 lakh should be maintained. Remaining 30 lakh 85,000 that we can utilize for the purpose of buyback. Last point, maximum number of shares that can be bought back at the rate of rupees 30 per share. The total is 38 lakh 85,000 is the total amount of buyback that we can utilize, and rupees 30 is the amount of buyback per share. So total amount that we can utilize for the purpose of buyback is 38 lakh 85,000 divided by 30 is coming 1,29,500 shares. So we can do maximum buyback as per depth equity ratio test here 1,29,500 shares. Simple. Okay. Now, okay, this is for today. Now I am giving you homework now. So it will take 2 more session, this buyback of shares. Okay. So we will solve question number 5, 6 in next session. But today's homework, write down here homework. Okay. Homework for today. homework for today. Practice question number one done. Don't do second because this is redemption of preferential. This point we'll cover in next session. Third. The company issue, bonus share, capitalization, liquidation. Yes, you can do third one because there is a simple question and we have solved similar question. Buyback of 25% of paid up capital, sold all of its investment at rupees 150. How much is the investment here? Investment here is okay. There will profit here, no problem. The company achieved the target. Now understand the difference here. Achieve the target means there is no need to do the calculation of these three T's. When it is specifically asked to do the calculation, comment whether the number of shares that the company want to do buyback is within the provision and all that, then we have to calculate those three T's. Otherwise, no need of it. So a company achieved the target. It means simple. They have achieved the target. There is no violation of company there. We just have to do the buyback now. So then third point is on 30 September 2017, the company issue one bonus share, fully paid equity share of rupees 10 each by way of bonus share for every 4. The bonus share there. You are required to pass journal entry and prepare balance sheet. So you can see the solution of question number 3. Question number 3. The simple first sale of this investment. So investment of rupees 1,40,000 you sell at rupees 142. There is a profit of rupees 2 lakh. Okay, then this is first sale of investment, then buyback of shares. Then after this buyback of shares. Now you can how we have calculated one by one. Okay, how we have calculated this 25% of his equity share. How many equity shares here? 2,400. 2,400 is the amount of capital. Okay, so 2,400 multiplied by 20%. That's come 600 is the amount of capital, and divided by if I say 10, so that will come 60. So here is rupees in rupees in lakhs. Okay, so we are doing here equity share buyback. We are doing buyback at rupees 15 per share. Now understand this calculation how they have calculated 900. 2,400 is the amount of capital. If I say share is of rupees 10, it means how many number of shares? 240 shares. They are doing buyback 25%. So 240 multiplied by 25%, that's come 60 lakhs. All are in lakhs. 60 lakhs shares. And we are paying 15 rupees per share. So 60 multiplied by 15, that's come 900. So here, this amount of capital 2,400, share is of rupees 10. This number of shares 240 multiplied by 25%. We are doing buyback. That's come 60 lakh share. 60 multiplied by we are paying for one share rupees 50. That's come 900 lakhs. The equity share buyback account debit 900 to bank account 900. Now what is the face value? 10. So 60 multiplied by 10. It's come 600. Premium we are paying 15 rupees. The face value is 10. We are paying 50 means 5 rupees extra. So 60 multiplied by 5, that's come 300. So equity share buyback, equity share capital account debit, premium on buyback account debit to equity share buyback. Now this equity share premium on buyback will write it off against securities premium. Securities premium account debit to premium on buyback. Now we have to transfer to CRR. What is the face value of the shares we are doing buyback is 600. They have utilized this general reserve 530. How much balance they have in general reserve? They have balance in general reserve. They have 530, and here in penal they have 340. So they have first utilized general reserve complete 530 and remaining. This is remaining 600 minus 530. It is 70. Okay. So general reserve account debit 530, profit and loss account debit 72, CRR account 600. Now they've also issued the bonus shares. So how many bonus shares they are issuing? They are issuing bonus share, one share for every 4. Now understand this point. How many shares they have on balance sheet? Did 240 lakhs. 2,400 is the amount of capital divided by 10, that is face value. So 240 lakh shares they have. So they have done the buyback of 25%, that is 60. So how much shares they have? 180. For every 4 shares they are doing how much? 1. So 180 divided by 4 multiplied by 180 divided by 4 multiplied by 1, that's 45 lakh share bonus share. Share is of rupees 10 multiplied by 10, this comes 450. This is the amount of bonus. So at the time of CRR, you can say don't get confused. Bonus share means bonus to shareholder account. You can say bonus to share. Instead of bonus share, you can say bonus share, you can say bonus to shareholder account. Okay. So bonus to shareholder account credit because liable to pay. and we cannot debit bank account because we are not receiving any amount. So we will utilize CRR account for that. You can also utilize other free reserve, but CRR account is the most restricted reserve which can be utilized only and only for the purpose of bonus. So here we get the chance, we can utilize CRR. So we will utilize CRR account debit to bonus to shareholder, then bonus to shareholder account debit to equity share capital account. Then now you have to prepare balance sheet. So question number 3 is homework. Practice question number 3 is homework. One more question, 2 questions. Just give me 1 minute. 4th question, no. 5th question, no. 6th question. You know, 6th question is similar to redemption of preferential. Don't do this. 7th question. Yes, you can do 7th now. Just give me 1 minute. Can you do 7th here? They wants to buy back 35,000 equity share of rupees 10 each. Okay, at rupees 30. Even 20 rupees will the premium on buyback. Authorized by article, resolution have been passed. The payment for the buyback will be made by the company out of sufficient. We have solved the same. Comment with your calculation. Will you try this? Comment with your calculation. You have to do all those 3 calculations. Just give me 1 minute. You can see question number 7 here. Practice question number 7 solution. Okay, just give me 1 minute. Okay. Yes. So first resource test 25% here, then 25% of paid up capital and free reserve. Okay. Then here number of shares. You can do it as same similar question we have solved today in class. It is this question number 7. Just give me 1 minute. Is similar to the question that we have solved in class today, which is question number 3. So you can write it down. In fact here. This is homework here for today, question number 7 also, and which is similar to question number 3rd that we have solved in class today. Okay, this is for today. So today's homework is question number 3 and practice question number 7. 2 questions is in homework. This is for today. Now tomorrow we'll solve from question number 5th. Okay, so this is for today. Thank you so much. Take care all of you. Bye bye.